In part 1 of our global investing series, we discuss why you should invest globally and how exactly you benefit from international investing in your portfolio. Now that you know why you should invest globally, the next question on your mind is how can you invest sitting in India? Well, there are two distinct ways how Indian investors can invest globally. First, fund of funds, and second, investing under RBI's Liberalized Remittance scheme. First one, fund of funds. There are approximately 50 SEBI-registered equity mutual funds in India that provide you access to foreign equity markets such as the US, Europe, and China. You can purchase these funds just like your Indian mutual funds through either your bank, broker, or you can directly buy through the asset management company in Indian rupees. They are called fund of funds because instead of investing directly in foreign equities, the Indian mutual funds convert your Indian rupees into foreign currency and invest these proceeds in global schemes. These global schemes are managed by foreign portfolio management teams who directly invest in equities of global companies. Now, of these 50 global funds available in India, more than half the schemes invest in the US and global equity markets. The remainder of these schemes provide exposure to regions such as the European Union, emerging markets, Greater China, and even provide you access to sectors such as technology and pharmaceuticals. Fund of funds are typically easier and less risky than investing directly in the stocks of international companies. The second method is to invest under the RBI's Liberalized Remittance scheme. Under the LRS scheme, individuals, including minors, can remit a maximum up to $250,000 in a financial year towards their capital account or current account transactions. Your capital account transactions include investments in foreign equities, funds, and real estate. Your current account transactions include expenses towards foreign travel, education, among others. The important thing to remember is that the $250,000 limit isn't inclusive of all such transactions. If you decide to bring the funds back to India, then your annual limit does not increase and still remains the same. Today, there are a variety of platforms available through banks, wealth managers, and direct online portals that allow investing in international stocks and funds. Where opening an account with an overseas bank may take up 2 weeks, these online platforms are able to onboard your clients in just a matter of a few days. So now let's explore what are the main differences between the two modes. First, fund of funds are managed by a professional management team with an established track record which is publicly available for investors to take a look at. However, investing in foreign stocks under the LRS scheme involves researching each individual stock. Second, you don't need to open an account to buy a fund of fund, whereas investing through the LRS requires opening an account with a foreign bank or a broker. Third, fund of funds are limited to the 50 schemes that I talked to you about earlier. In contrast, under the LRS scheme, investors have access to more opportunities and individual instruments. Fourth, fund of funds can be invested in Indian rupees, whereas investing under the LRS scheme requires the investor to convert Indian rupees into foreign currency. Fifth, since fund of funds invest in foreign offshore funds, the cost of investing is typically higher than investing in individual stocks or index funds. On average, the expenses of these funds range anywhere between 1% to 2.4%. Sixth, from a tax perspective, investing money under LRS results in a 5% TDS, which is not the case when you're investing in fund of funds. So guys, investing globally is not a choice today, but a necessity to build a fully diversified portfolio. If you have any questions on international investing, then please provide your questions in the comment section and our team will reach out to you. Thank you. Are you interested in optimizing your salary so that you can take home the maximum amount possible? Hit the subscribe button and watch our next video on how to optimize your salary for a 25 lakh income.